What's up, guys? Get started in a second. Good morning. Good morning, good morning, good morning. I'll stay on video for a minute or two, and then I'll get it out of the way, because I noticed in previous streams, depending on what I'm referencing on the chart, sometimes my big head is in the way. But good morning, good afternoon, good evening, wherever you are. Just give me a sound check. Turn down the background audio. It's probably a little loud. Just let me know. I know the mic is good. I know we figured that issue out. It's no longer an issue moving forward. I have a Shure mic, so podcast quality finally. Background noise is good. Okay, I just reshared a link, so I'm going to give it another minute. And yeah, we'll get into it. Hopefully you guys are doing well. All right, let me get, we'll get it started. Let me get my face off this thing. Okay, cool. A few people coming in. Good morning, good morning. All right, let's get into it. So, if you're not a subscriber, make sure that you hit the subscribe button, hit the like button. This is a relatively new YouTube. A lot of you know that you know me from either Twitter or the Block Roots YouTube channel. Still part of Block Roots. Still going to be putting out content on that channel, but I've put it on pause to grow this YouTube. So if you would be so kind to hit the subscribe and the like button, that'd be great. And again, as always, none of this is financial advice, strictly for entertainment purposes only, yada, yada, yada. I think I have a pretty mature following, so I think most people know that they are responsible for their own actions in the market. So I'm just hopping on a stream to provide my opinion, my color, and that's it. I don't want you guys to take positions based on, you know, what I am saying purely. All right. We need a screenshot of your library. Let me just say hi to everybody. Himanshu, what's up, man? Rug, Brooklyn, Matt, Chris, Encapsulated AO, Believe Notes or Believe. Z, what's up? Hago, I cannot pronounce app tip. XXL, what's up? All right, yeah. So before we get into anything, shout out to Femex. You guys already know by now, unless someone's new to the stream. Myself and Rager, we've been partnered with Femex now for a really long time. Femex is a phenomenal exchange. It offers no KYC spot and futures. So I know maybe not everyone is good at shorting or playing the downside, but at least the benefit of futures is that you can hedge your spot. So if you deposit spot onto Femex, you can just hedge it with the futures contracts. And again, it's no KYC. You know, this is an exchange that does offer KYC, but they don't enforce it. Obviously, I think the direction things are going, exchanges at some point are going to be forced to enforce KYC more, but there are still exchanges out there that don't enforce it completely, meaning that they still speak to sort of the core ethos of crypto, which is that you could be anonymous and transact. If you're interested in the exchange, check out the link above, check out the link below. And yeah, my favorite thing about the exchange is honestly just the people. And I don't, like, I'm not saying that I'm talking above anything with respect to execution and product offering and the instruments that are on there. It's a great team, and it's always good to find good people in crypto because there are so many people that are, for lack of better words, shitheads. Okay, so couple things that I think are worth going over before we touch on BTC and we touch on alts, and I'll take some chart requests. Flaz, what's up? Alan, what's up? So current events, gilts, right? So gilts basically bonds. Okay, so the pound is destroyed. There's tax cuts, and we saw gilts sold off, and the Bank of England had to actually step in and buy gilts to save what it seems like save pensions. And this is funny because gilts were something that the Bank of England was ultimately planning on selling. So they've done a complete reversal, and they've gone from intending to sell gilts to actually ending up purchasing gilts. And this is yesterday. This is interpreted by the market to be bullish, a form of QE. It's a really small amount, so it's kind of a drop in a bucket. This is not the Fed we're talking about. But this is definitely a sign. There's more signs of cracks, I guess you could say, in the structure that are beginning to form. We're not just beginning to form, but they're becoming a lot larger at this point. So you have the pound destroyed. You have Bank of England's actions. Inflation still rampant. Dollar still on its sort of wrecking ball course. The 10-year, the 2-year. The 2-year breaking 4%, quite significant. That's obviously looking like the 10-year and the 2-year. 10-year is more of a benchmark, but the fact that you can have essentially a risk-free rate of 4% is, it makes it much more attractive than obviously when things were much lower. And risk was on the run, meaning risk was performing really strongly. So the value proposition of risk is not attractive when meanwhile you can get 4% yield from treasuries. Couple things, Druck came on yesterday. Druck's always doomerish, and I'm not really, you could tell I'm not like, I'm just kind of rattling stuff off, just thinking off the top of my head, some stuff macro wise before we get into the charts. Druck's always doomerish. He believes that we're going to see a nasty recession. So 2023, I think, he'd be very surprised if we didn't have a recession. Druck is on point a lot of the times. The times that he isn't, he changes his mind and his positioning immediately, which is obviously the sign of a really good market participant. But he has extremely high confidence that 2023 is going to be essentially a shit year, and we're going to go into a really bad recession. And this is really interesting. It's not interesting. It's terrible. But I think, who just said it? Sorry, I'm sipping on a probiotic watermelon soda. Who just said it? Ken Griffin was just talking about this. So Ken spoke yesterday. Druck spoke yesterday. There's a bunch of people that spoke at this Alpha conference. I forgot what the name of the conference was. But Ken Griffin, right, so of Citadel, said something along the lines of how this is going to be just a complete destruction of human capital, unlike any that we've seen in the last few decades. If you think about how basically in like a 3-year period, we'll have the effects of COVID, that's effect on the job market, that's effect on the economy, people getting employed or going back to employment, or seeing somewhat of an improvement in that, and then now to go into a recession in 2023, it's just like, it's a left hook, right hook, basically, on the economy. So, my main point of all this was, when I was saying that you're seeing cracks, and I posted something on Twitter yesterday, and I guess, I should make like a little bullet point list instead of rattling these things off, because otherwise I'm just like trying to recall from memory. What did I say? Rest in peace, Coolio. Oh, here we go. My 2 cents. Things are showing some serious signs of stress, and you don't buy big when you see that. So there are a lot of people that are talking about, the signs of stress that we're seeing in the market. They're looking at market structure also. So the S&P being at, the most significant line on the chart, most significant contextual level. And they're like, oh, this is like, pure bottom type of behavior. And I've been saying on record now for months that I think that the market is in the process of bottoming. I said something along the lines of, bottom tick would be in Q4. So we're there now. But people are saying like, oh, these signs of stress, like right now, when the pound is getting decimated, when we're seeing just like foreign exchange markets blow up, basically, not blow up, but I think you kind of catch my drift. These are great bottoming signs, right? These are awesome sentiment signs. No, these are signs that things are like, this has many times before, like preceded much worse events in markets. So these are kind of like canaries in the coal mine, and sometimes you get one, sometimes you get a bunch, and you're getting a lot right now, honestly. So, so I said, you could take that as a sign there might be something worth buying, right? But I think that that's after the larger move is printed. And then I said, thinking too many got too bullish after Bank of England's action. So the too many that I'm talking about was like my peers in crypto. It's not like you see across the board, like everyone is suddenly getting really bullish. If anything, it's still like a very ominous feeling in markets. But my point about like things cracking, and someone referenced this yesterday, and I was talking to, here it is, Marathon Crypto, who's a great follow. People forget about Bear Stearns a moment before the Lehman moment. Okay, so Lehman went bankrupt in 2008, September 15th, 2008. After Lehman went bankrupt, right, which is like major crack in the system, right? Oh my God, too big to fail. Lehman went bankrupt. After that happened, you could have very well looked at that as like, oh, this is like a sign of sentiment. This is a sign of, not sentiment, but this is a sign of where we are. Like, kind of like what happened in crypto, carry the biggest players out. 3AC blows up, sort of, comparing that to Lehman, comparing Lehman blow up to like the fund blow up that we see, the funds blowing up that we've seen in crypto. So Lehman blew up. The market rallied quite significant after that. So Lehman blow up is right here, right? So the market ends up moving down a little bit, but ultimately, if we just go off the low of that day, the next couple of days, like the next week after, market is up almost 10%. Now, this is a very sharp move too, right? It's a 2-day rally that engulfs like much of the prior structure, that preceded on the way down, right? This is a daily structure. So it takes out, days, if not this case, this is a couple weeks worth of progress on the way down. And that looks like, oh my God, like, yeah, this is like, we've hit bottom. And then meanwhile, the market it ends up dropping like 20 or 30% after that. Holy shit. It gets cut in half basically. So I think that just like, all right, I understand Bitcoin is, it's not a hedge against inflation, but it is possibly a hedge against, central bank malfeasance, central bank negligence, whatever you want to say. And, Bank of England's is clearly, I think their response, as Jim Cramer said, was probably very reflexive and I forgot the term that he used, but it definitely wasn't something that I think is completely thought through, or that I don't think that they have maybe intention of continuing it. It's not like I don't think that we're going to start seeing like QE come back in full force. Like, I think that's a really dangerous thing that crypto traders really hang on, is like that it's coming right back, and it's like clearly it's not, right? Or at least the Fed has no intention of restarting QE. Inflation is the number one issue. So I think I covered my point. My point was we're seeing a lot of cracks in the system. Cracks don't mean like this is the bottom. If anything, cracks make me more worried, right? Cracks make me more worried of like, your flash crash, your tail events, your black swans, and so forth. So anyway, let's get into BTC. No more riffing. Well, first we'll look at the S&P. BTC is still behaving, like risk. There's probably a brief idiosyncratic bid yesterday. Brief, right? Druck even mentioned like how crypto might be a, what did he say? It might be like people might flee to it over the next couple of years if they see that things are really getting bad and currencies are, being completely devalued and central banks are just off the mark. But that's not like him saying that that's tomorrow or this week or this month and we're going to see a pivot. In the time being, Bitcoin is just following the S&P. There have been periods where the correlation has been weaker than others, but by and large, big moves in the S&P, either up or down, translate to similar moves in in risk assets, and Bitcoin and crypto they're just behaving like risk asset, like a risk asset class. So the S&P is at the most significant contextual level on the chart. This is the make or break level, right? So stream I did a week ago, and I apologize to my scriber, 17 bidding, when he's going to have to write the stream because it's early. I hopped on a stream early and my brain is kind of scattered. I had mentioned that this is definitely not an area you sell into, like selling into the hole. This is the most significant level on the chart. This is where change occurs. If we accept below 36.50, right, or whatever it was like 36.44. If we see acceptance below that, then it's look out below, right? It spells trouble, right? This is no longer the bottom pivot. And we didn't have any kind of acceptance through there at all. We've had, a spike through, very significant response. Market can continue to bounce from here. This is the best risk reward for any kind of swing long position. Not to say that means open up a swing long, right? Just contextually, this is the best risk reward. This is the most attractive area to define, in invalidation, whether it's a really tight stop, whether it's a loose stop, whether it goes all the way back down to, even the next support level, which would logically be, next high time frame area market structure. It's a prior year's point of control, I'm pretty sure. Let me just double check that because I don't remember. Hold on. Inputs. Month 12. Let's see if we're going off memory. Not quite. Wait a second. Maybe the rows are a little janky. No, it wasn't. Anyway, still. High time frame area market structure, we would expect a response right around 34.68. So the point is, like, even if you defined a invalidation all the way down to there, there's still an attractive risk reward to be, there's still attractive risk reward, at least at this location. There's the most attractive risk reward for longs than anywhere else within the structure. So that's important to know, right? If you would expect the S&P to bounce here, I think that if the S&P bounces, obviously, if we're going to see, the S&P rally over the next few days, whatever it is, hypothetically, right, that BTC would follow. As far as like positioning goes, you can see the last two rallies that we've had. This one more specifically have been coupled with some pretty aggressive buying behavior on derivatives. Rather in derivative markets, specifically the swaps. So you could see that funding began to shift positive. So you've had predominantly positive funding leading up to this pump. One sec. This thing's in the fucking way. Predominantly positive funding leading into that. Spot CVD dragging behind Perp CVD. Nothing really that stands out. There's obviously Perp CVD is always going to be a larger value than spot CVD just because of the value traded, the notionals. But a bunch of open interest coming into that, some signs of absorption at the high, wipe out of that open interest in the move that followed, liquidate some longs. Now we have another small rally in the area where you would expect the market to rally into, right? I mentioned this yesterday. I ended up getting long above that high that I shared. We'll go over that Kind of filled out this gap. You have an increase in open interest on that. You have positive funding coming back in. And I think you have a hopeful market right now that like risk is going to rally again, because again, the S&P is at a significant level and you are seeing some wonky behavior by, by central banks. And we know that Bitcoin likes to respond to that. But this is still within a high time frame range. Like we just kind of accepted back within a structure that we've been within for, the last few weeks. Positioning wise, open interest, I still think is more dominant on the long side. So I'm not too keen on like just longing this. My whole approach recently, and not recently, like in the last few months has been just very low time frame. Like that, nothing really has been that compelling on the high time frame. It's been a few longer term swing trades, right? We had a significant rally for a couple of weeks, beyond a couple of weeks. But other than that, like the market is still looking like shit. All right, so let's get into it. More low time frame stuff. This is Sierra. So I've gone back to Sierra. I just think that Sierra, I've used every platform. I won't even go into why I'm going back to Sierra, because I've probably said this a million times. Weekly TPO, just to give you an idea of where we sit on the high time frame. Again, I said we're back within a range. This is last week's TPO. This is a very balanced composite, value between 19.5, 18.7 region, and we're kind of in the middle of that, right? We're above the last 2 weeks point of control, so that's good. I think that the market is a little bit heavier long. We haven't attacked the lows as much, but we're still within a range. So it's, again, from a market structure standpoint, not the most attractive area to take positions, right in the center of a well-accepted region. This is kind of what we've seen the entire year, where you have gaps on the way down. This is not like a gap, but it's an area of just low activity. The market reaccepting into that region. We usually see that fill out. So let me draw this a little bit better. Hitting my drawing tools by accident. Whoops. Oh, that's going to open that. Here. Wait 1 sec. I'll use the box from this. Okay. So these low volume regions, we've seen that when the market accepts into these regions, that we tend to fill them pretty quickly. So it's the same play that's happened again forever now. And the trade is usually the acceptance back within the gap, right? Because you're looking at ultimately the threshold of the gap as the area that would act as resistance, and we would ultimately get, see demand cut off, or a momentum shut down. And I'd shared this pivot right around 19.2 yesterday, because it nicely lined up. It was a prior day's or it was a current day's high, and it had nicely lined up with that gap. So we filled that out. I think that if ultimately, if you're going to remain bullish, what the fuck is that? You want to see that the market continue to hold where much of the volume is coming in. What happened? Still figuring my way out around Sierra. Like all the keys I have to hold to move shit. I think you want to see that the market holds somewhere above 19.5 for continuation. Acceptance back below this pivot, back below that retest, I think just leads to another imbalance move in the opposite direction. And a big puke likely if we break down back to yesterday's lows. And just because I think that the majority of that open interest that has come in is, again, just is quickly, our longs just getting, very aggressive. So what this, sorry, my, about to choke on some water. This was the retest that I shared yesterday. So just to give you an idea of what that looked like, this high, that gap region, I shared it on Twitter at the specific point, but that retest was very brief. So if we go all the way back, this is what it looked like. So the market had accepted into that region, sold it pretty hard, and that was it. It was off to the races. That is what I talk about when I say sold and hold, right? You know, market breaks above a level. In this case, it was this pivot. It was into this gap. Immediately, sellers try to bring this back down, but the market is able to remain bid and to weather that selling behavior. So that is a kind of, you know, textbook retest for any kind of level that I'm looking to hold. And in a gap, it's more often than not that you're not going to spend too much time doing that. So I've said this so many times now, I feel like I'm boring people, but gaps like this are untested positioning, right? So the minute that you accept into that gap, if you don't see that sellers are able to drill this down or that longs are getting caught off sides, you know, if you had longs caught off sides here, sellers come in and then the market is able to move lower on that, then it's a different story. But the minute that you accept there and that it's clear that bulls are taking control, there is not a whole lot of anything that stands in the way of that moving pretty rapidly. Sorry, I'm trying to use these hotkeys, but if I'm using the hotkeys for my drawing tool, it's actually, I realize it's triggering the CR hotkeys as well. Come on, page. Here, get to the end of this. Yeah, so I used CR for a really long time, but I got out of using it. I don't use it to execute, but it's really, I guess I would say clunky. So, you know, there's certain keys you have to hold to move the window without fucking up the scaling. So that's what I'm having trouble with. There was a setup that I wanted to show you. See, that's what I'm talking about. Looking at CVD, going back a few days, clear sign of absorption. For anyone who's just learning CVD and wants a good example, this was a really good example of absorption right here. So lower high, market is making a lower high, rejecting outside of value, and CVD is making a higher high. So that's kind of a textbook CVD divergence. Just in case anyone wanted to know, because I know you guys have asked many times like how I use CVD. One sec. Yeah, I definitely should have spent more time on Sierra before I came back and did a stream on it, because now I'm getting fucked up with, I don't know why that keeps popping up. All right, so anyway, TPO. Does anyone have any questions real quick before I go on? I'll just give it a sec. Oh, there was a point I wanted to touch on earlier. I would keep an eye on gold, because we know that in the past, Bitcoin has moved with gold. And it's possible that with everything that we're seeing, that gold is responding. And the word I used yesterday was with like an instability bid, like global instability. You know, if gold's going to respond to that, if gold's going to respond to any kind of central bank activity, then I think Bitcoin will as well. So I think that it's possible that Bitcoin resumes sort of a gold correlation. And if it's to Bitcoin's benefit, right, if gold is moving up, then all the better. Yeah, no, I don't watch OBV. I used to look at OBV back in the day when I was more of a like trend follower in this market, but Windows 95 software. Yeah, so this is a pain in the ass. It is really clunky. It's the best platform out there. Sierra's phenomenal. Like if you can execute through it, that's great. I think I'm getting sick. but it is really clunky. Like, all right, so long story short, I used to use Sierra for years. I used to use Trading Technologies. I've used Sierra. Sierra's much more affordable than Trading Technologies. Trading Technologies, like, it's like $1,000 a month. So most people in crypto aren't going to be using Trading Technologies. It's only connected to like Coinbase, and but I wasn't using TT for trading futures in crypto. I was using TT trading legacy futures. Anyhow, Sierra is the best platform by and large, but it's really clunky. So Exo Charts is great, but doesn't have the level of customization that Sierra does. I've been looking for a platform, obviously, where you have all in one, right? Where I can execute. I don't trade on Binance, so I can't use Sierra to execute. But in terms of like an order flow suite, again, the level of customization in Sierra it's unmatched. So my thing with it was, I'm using QT to use the DOM and to trade. I tried Atlas. I didn't like Atlas. Adam was kind enough to give me his templates, but it was just like buggy for me. So finally I was like, all right, I'm tired of using a couple different websites to pull up information. I'm just going to go back to using Sierra, and I could, I could put up everything that I would kind of scan for on, for example, like large trades. You could find your heat maps on here. You could create heat maps on here, CVD, Delta, all of that volume information on one platform. And it is the most accurate too. So if you look at like a TradingView volume profile and you look at a Sierra volume profile, you'll notice that there's the level of granularity on Sierra is much higher, whereas TradingView is a lot more smoothed over. And I think that you could miss out on some valuable information from just that alone. So it is clunky. It's a pain in the ass to get used to. Again, like, one thing you get used to when you use any platform is like just you become fluid with it, right? Like, you know how to like maneuver the chart and get from point A to point B and scale the chart. The one thing that's not intuitive on Sierra is that, like, there's all these different settings. I forgot which ones I used to have checked. Right now I have it on scale range automatic. This might sound silly, but it is like the thing that bothers me about it is like whether I want to move it from left to right, or do the things that I'm used to doing on TradingView. There's certain keys that I have to hold on Sierra, and again, I'm just not I haven't used it enough recently to remember everything. No, I don't. I've been debating on this recently, on Bybit, on whether or not it was even important for me to continue to watch that order flow. Because during the bull market, there was a lot of like degen behavior, and Bybit was pretty clear from the difference between degen behavior and like smart behavior on Bybit was really a lot more obvious than on Binance. Binance is, if you're watching one exchange's order flow for a long time, you get used to those values, you get used to those norms, those volumes, and because of that, like what size to look for. Binance is more noisy. There's much larger depth of participants, much larger notionals, and I didn't really trust the order flow, honestly. Whereas I was acting on Bybit order flow, and it was working. It was working significantly. Like, it was giving a lot of signal, or I'm definitely getting sick. It was giving cleaner signal. But I started to notice in the last few months, like, I started to question whether or not I was looking at redundant information, or just being redundant by having Binance and Bybit open, and always having Bybit on a tab somewhere, or a footprint pulled up, or a CVD pulled up. And obviously this stuff takes up mental bandwidth, like looking at multiple things. So I was beginning to wonder if it even made sense for me to still do that, or if it was, still a reason for me to do that, or if I was just wasting time. I started to see that Bybit order flow and Binance order flow began to, the activities that took place on both exchanges was similar, but it was just a difference of size. So I've completely stopped looking at Bybit order flow, and I had a conversation with Adam about this, and he's kind of shares the same sentiment. And I only look at Binance order flow now. And I've always said in the past, like, you want to look at the, you always want to have an eye on what's taking place on the leading exchange by open interest and volume. And that's Binance. So it makes sense. Binance is like, if you're trading, like, and this isn't the case because if you're trading the S&P, you're trading it through the CME. But Binance is like the CME, or it is like it is the leading exchange, right? It's different because there's no centralized exchange the way that the CME is for legacy futures. Like in crypto, we have multiple, many futures exchanges that are involved in price discovery. But yeah, I only focus on Binance now. Binance futures. The futures market is the most important market, honestly, in this market. It is responsible for price discovery. Sustained price discovery is different, right? Sustained price discovery, like a sustained trend, is going to be accompanied by strong spot behavior. But for my trading, I focus on the futures market. If you're thinking about like getting involved in size either way, the futures market is more liquid. So no, I mean, the futures market moves price as well. The spot market is what determines the index price. So this will determine the cost of either being long or short, but a lot of times it's the futures market that's responsible for many of the moves we see. Just think about it. Most of the shorter term activity in this market that we see is not unwinding of spot positions. It's unwinding of futures positions. Spot doesn't have like a pain point like futures do. I talked about this. Futures have a pain point. Futures have path dependency. So you have a liquidation trading futures. Spot, you don't. So we see really nasty trap setups in the futures market. You don't see that, obviously, in the spot market for obvious reasons. And again, I remember earlier I talked about on another chart, we were talking about this move up. And this is just a good example using Sierra. I just briefly said before, this moved up. We saw absorption. Here's your CVD and here's your price action above. So the idea is the price action above is relatively flat topped. Meanwhile, CVD was trending up the entire time. And this is right here specifically is where you had that increase in open interest. So just while looking at the chart, I figured that'd be a good example. Any more questions, guys? I'm happy to take questions this stream. I noticed like I am feeling kind of under the weather. Do you always have a long short via limit orders? No. A lot of the times for my intraday trading, I mark it in and I try to limit out. There's plenty of liquidity in this market to intraday trade size. I don't care what anyone says. If you're trading 8 figures, it's a different story, but you could trade up to mid 7 figures without much of an issue for a lot of these moves if you're marketing in and limiting out, or you're trying to limit out. I mean, there's some setups where I have to market out and the slip is, and the cost is part of the cost of doing business. Obviously, when conditions are like this, you want to have more optimal setups where the risk reward is more attractive than like small, nothing moves. Dollar down, S&P's down. One 1.5% already today. I mean, well, it's actually yesterday it probably closed higher. Yeah. What's it called? 5 periods of value overlap now in the last 5 days. So again, as I said earlier in the stream, we're just still ranging. Balance down here. I had this line on, and I shared this on Twitter maybe a couple weeks ago now. I think that this actually will be pretty relevant. So the lines that I had on were the weekly. I talked about how significant daily closes through the weekly have led to continuation. So weekly floors that we establish. So none of this was printed until that weekly had closed. So that's why this is more relevant than all this. You had we've just been chopping around here, but we haven't had any kind of big move into this region, which is not one. I'm kind of repeating what I said in previous streams, because again, we're kind of back in that range. But if we get something that is firm into this low, I'm not going to buy that. I'm just going to bet on continuation. But the other level was this diagonal. So I think if we end up moving sideways or drift up through that'll bring in a lot of activity into the market, because that just means that the path of progress downward has slowed and possibly has shifted. Just check questions again. What do you think of the zero trading fees on BTC spot at Binance? I think it's smart by them. I don't know how that works. Like if you need to have BNB or I wonder if spreads have changed over time on the exchange, but I think ultimately most exchanges are going to be moving towards that. Especially during times of stress when other exchanges are possibly on the rocks and you could gain more market share. Like, Coinbase doesn't really do too well in the media, and Binance being, another major exchange, if you could just see sort of the game theory behind giving away some of the house, I guess, during certain periods. So providing zero fee access to gain more users. But then Coinbase came out with a subscription model. Femex had that subscription model originally. Let's see. So Mondo, I had built a spot position when we first came down to the 200 period. I puked that initially. I built it again. Now we're going back. Long story short, no, I don't have one again now. The original move to the 200, I bought that. I puked that. I bought again. I was able to capture a bulk of this rally. But no, I ended up getting rid of my spot. I think this is over a week now. Because my thinking was that we were going to poke into this low, and I wanted to see what would happen after that. I'm much happier buying into strength on the move up than catching a falling knife in this market right now. It's just not. This is a never before time. I mean, all times are never before, but this is a really unique environment. FTX spot Sol CVD. Yeah, one sec. Yeah, this morning I woke up and I had kind of that sour taste in your mouth on the days you're sick. Like something's just the phlegm or something. I don't know. Well, this is not the chart I wanted to load. We'll look at FTX spot CVD. Shouldn't have all these open anyway. I mean, it's just been one-way tripping down, right? I mean, if you look at CVD and then you look at price, that CVD being one way down and price being flat. Look, I think the same behavior I think there are pairs that during a reflationary period are really going to be benefiting. And I think Solana is one of them. So I think this is just going to follow BTC and ETH. So if you're seeing absorption at the lows on BTC and ETH right now, whether or not those spot holders continue to hold if we move lower is a different story. But I think you're seeing the same thing on Solana too. But that's only on FTX? Let's see. It's a little bit different on Binance. So for the most part, the only markets I want to focus on when I look at any of these aggregated CVDs is Binance, FTX, and Coinbase. Still the same story when you have all those picked. So yeah. So yeah, it looks like it's being sold off, right, pretty consistently. But I think the more salient point is that hasn't, throughout the duration of that CVD being down, price has been flat. Trend reversal candles. Yeah, I've used those plenty of times. So I switch between candle settings. So for example, and that's one of the benefits of looking at, see, here we go. That's one of the benefits of looking at, or using, excuse me, Sierra chart is, so I have multiple candle settings up here. We'll just switch between a couple of those. See if I can get a hotkey right. Let's expand this window. There we go. So right now this is set to 10 minutes, but I also have 1,000 trades. I prefer tick charts more recently. So this is 1,000 trades. This is 10,000 trades. And then this is 350 trades. I also will use volume periodicities as well. I used to use trend reversals more frequently because they do box out the structure a lot, and like a lot more. It's a lot cleaner, I should say. But I think that maybe that's better when things are slow, like really slow. I still prefer, and even if I think I've realized recently, I still prefer tick charts over anything. But I do switch between the time and the tick chart. Like I try to make sure that I have the reason I do that is because I try to make sure I have a tick chart that kind of resembles the time frame of a time-based chart, if that makes sense. So if I'm looking at, this is the 3-minute chart over the course of the last 2 days, I want to make sure that I have a tick chart that somewhat resembles the 3-minute chart. So that would be my 10,000 trade chart. Oh, I forgot about the hurricane. Yeah. My thoughts go out to anyone who is in Florida right now. That is that looks terrible. No, yeah, I've been using Binance. The best indicators for me are the one. So long story short, when I came to crypto, I was just kind of passive in this market. Still more intent on trading legacy markets and coming off of trading crude oil. And that I was using the tools that I'm using now. So when I came to crypto, I was more of a trend follower. I was kind of just part-time in this market. And I was using things like moving averages and on-balance volume and RSI. But if you're going to trade order flow and you're going to trade something full time and you're going to trade intraday, all order flow based tools take precedence. So, or priority, become a priority. So the most important things I can think of: profiles, CVD, VWAP, footprints are useful, right? So for example, like seeing that retest on the low time frames, knowing that it was only going to offer a very quick retest if it was going to work because it was in a gap area. But I think that the most important tools are ones that are derived from actual transactions that are taking place, not ones that are just created from 4 points on a candle, right? So most indicators are based off candle closes, but it doesn't tell you what took place within the candle. I think Sierra charts is more comprehensive. I think Exo charts is more user friendly. Just give me 1 second, guys. I gotta step away to refill a water. I'm gonna put you on mute for a second. All right, I'm back. So where were we? How reflexive all tokens are to each other. How shitcoins not even on exchange can fluctuate on dexes without actual transaction volume from bots. Bots. Let's see. What does Sierra cost? Can't find it on the prehistoric page. I know it's literally there are so many jokes around Sierra's support page too because they hate crypto, and they're just not very friendly to things that they don't want to help with. Like I don't have any examples on me right now, but their support page has been quite comical. They have no intention of like moving into the future, even though this is the amount of stuff that you can do with this platform is incredible. But it's clunky. It's definitely not user friendly. It's not smooth. I mean, it's smooth to use it, but it's not very intuitive. It looks like it's 20 years old. It's like, I don't know. It's like maybe $90 a month. I don't know. I'm not sure. I just click subscribe again and Spaceman actually has some really good indicators. You know, the most important thing with indicators is like, do you know how it's derived? So like, do you know? Most people like talk about the indicator like it's something independent of price and price, and most indicators are based on price. Most important things are price and volume. Most indicators are based on price, and they talk about it like it's something outside of what's taking place in price. It's like almost all indicators are lagging indicators. So, you know, a problem is like when people don't understand how indicators are derived. Like they talk about RSI and momentum like it's something independent of the actual movement of market structure or movement of candles that the RSI is based on. And for example, like RSI divergences are always going to happen in a strong trend. Like it's always going to happen. So not knowing little details, you know, you might look at indicators and lean on them, you know, and really trust them. when again, they're none of them are magic bullets. They're just things that are already, they're showing you what already is displayed in price, but they're smoothing it out to make it more, I guess, digestible, to see when momentum is slowing and when the trend is, beginning to taper off. But he has some great indicators. He has like VWAPs and VWAP standard deviation bands, and I think he has a footprint, and he has TPO. What do you look for when the market is absorbing the dump? I look for an increase in volume, so relative volume. If you have things that stand out like CVD divergences, that's great. But increases in volume for that are not met with any kind of change in price. So you see that the market trades through into a level, it's trading across the level, relative volume's picking up. And ideally there's some kind of a sharp responses off the lows. But absorption is, if it doesn't stand out in CVD or on the footprint, you should be able to see it on the footprint because you should see increases in relative volume. It will show up in actual amounts transacted, or a sign of it is the actual amounts transacted. Like again, an increase in relative volume along a region rather than just a consolidation, which is just, market moving sideways. But again, it's like if you see an increased amount of selling activity, but it's not rewarded, right, with any kind of further progress, then that's absorption. Same can be said with buying. And that's exactly what happened back here, right? That's what we just came off of with BTC. You had an increase in buying across the structure. Look at, what the fuck just happened? Same thing happened right here. CVD trending up, price is flat and somewhat sideways. So volume's increasing into a level and not being rewarded with any kind of further change in price upward. Do you have a trade other top 50 coins? Atom chart? Yeah, I do. I trade majors when they're attractive. I was short long and then short Atom. Remember the other day, if anyone was following me on Twitter. So I was looking for shorts in Atom originally because this change in market structure. So first time we had a significant break of daily structure in a really long time. But the thing to deal with was this high time frame level going to act as support? Clearly it didn't. The break in market structure was more important than anything else. I think that back to just my original line of thinking, which was this breaking leads to a throwback and then leads to these lows being taken out. The danger in this structure is a cascade because you have all these lows that are uninterrupted on the way up. Once the market accepts back below this pivot, that sort of 1240, 1250 region, there's no real reason why this low shouldn't lead into this low, and so forth. Brian, you pay 46. Okay, yeah, I don't know what the total is. I think what I say 90. Maybe I paid for a couple months. Addis looked amazing, and that was the thing. I celebrated it too early. It looked amazing. It had really great DOMs, which are not necessary, but I'm used to using a DOM, so for execution I prefer it. It had access to the exchanges that are relevant and that I trade. It just looked good. I was excited to use it because of the DOMs, but then also I guess it was an easier switch to make because Adam had given me his template to work off of and recreate my own, and I really enjoyed it because it kind of had this. I was able to create this type of setup that you're looking at right here. Normally I don't have this all on one screen. I have it popped out. But the fuck, why does that keep... I was able to create a setup like this where I had a daily 30-minute chart with pivots, profiles, weekly TPO, daily TPO. Everything that you're looking at here was very similar on Addis, but it was just weird. It was kind of laggy, and there was 2 times where I started the platform after saving my template and things were different, and I don't know. I have high standards, and it just it was an immediate quit. AVAX. I don't see a reason why anything is going to do anything different than everything else. So whether that's AVAX, Solana, they're going to do what BTC and ETH do, which is going to do what the S&P does. The S&P's that, ooh, it's looking uglier now. You kind of have a lot of people that got bullish yesterday deleting their tweets and walking back what they said. Too early. Like, that's not a good sign. You don't buy when things are breaking in FX. AVAX though. I don't know. Nothing's attract. I mean, AVAX is the only attractive thing in AVAX right now is its proximity to the most significant level on the chart locally, right? So in terms of the weekly trend down, this being the first major pivot, this is the best area to define risk, but there's no reason I would say to take a trade off this level unless you're expecting BTC to perform positively off of this as well. Inside, nope, not an inside weak structure. Yeah, it just looks like it's flag. It's at support, but it's not a support I would buy right now. It's not doing anything major against BTC or ETH. It's just acting like high beta to both, so slight outperformance. Yeah, I'm sick. I hate being sick. When I'm sick, my brain's kind of foggy. I have like this sour, it sounds gross, but you know, like sour drip in the back of your throat. I posted my books on Twitter, so yeah, just search my name with books and it's gonna pull up a big list of books. GMX, ETH ugly. Where's, oh, I don't have it on here. Did I? GMT now. What is GMX, dude? Surprising. I have no idea what this is. Oh wait, okay, I know what this is. Never mind. I have not been focused on alts at all. This is the exchange, right? Yeah. This is what Hayes and I think Crypto Dog have been talking about for a long time. Yeah, I knew it was kind of, I haven't focused on alts in a while, but I didn't have this on my watch list. It's probably, that momentum is probably done though. Like the Hayes momentum, the Crypto Dog have been talking about this. I just looked at AVAX, Matt. I don't know anything about this other than the last few things I said. I mean, trend-wise, weekly high or low, maybe. Kind of looks like it's put in its high though. This being relatively new, the chances of something being relatively new from here moving just up, very slim. Even in a bull market, towards the midpoint of a bull market, towards the end, where there's still tailwinds, still something like this ends up correcting all the way, putting in another accumulation, and then moving up. So yeah, I think retail has more of an advantage in crypto. Cardano. Garbage. I think that there's a lot of stuff that is absolute garbage that makes crypto look like a joke that is still in the top 10, like XRP and Cardano. And like, if you're a Cardano bull, sorry. But again, know where it's coming from. I don't know. I'm not a tech guy. But I mean, does this look like it's going to break down or up? You know, if you asked a 5-year-old what the trend was, it's down. High time frame moving average wise, down. I probably shouldn't say it's garbage because, again, I just started saying that I don't have enough of a handle on the tech. But trend wise, this is in as bad of a trend as everything else is. Near. Weakness against ETH, weakness against BTC. Same thing as sort of Solana and AVAX and all other majors. Just back down at support. The chances of, like, I think chances are significant if absent any kind of major flop in legacy, like it, absent the S&P just breaking down completely, I think there's reason to expect that these lows will offer a bounce. No, I haven't said anything wrong about the S&P yet. I've followed multiple times. Like, if you go to the post where I said I think the markets are bottoming, one, I posted that down here and the market rallied tremendously since. Posted that commodities were topping at basically the oil top. And I also said right after. So if you don't take the post out of, you know, if you don't cherry pick it, I also posted right after that bottoming, and this is no Al Ghul, I'm not jabbing you. That bottoming didn't mean that I thought the bottom tick was in. So, oh, and I definitely know I'm wrong on tech. I could judge tech the same way that everyone else can when you could actually touch something that's tangible. Like, you immediately knew when you touched an iPhone or iPad or any Apple's products back in the day, it was like, okay, this is going to take off. I don't have any, like, I don't have any grasp of tech when it comes to programming, developing, anything like that. But as far as the bottom, yeah, I didn't think that the BTC bottom tick was in. I said that that was going to be Q4. That's like best guess. Like, who the fuck cares about my opinion? But the S&P bottoming, I said I wouldn't change my tune even if we bottom ticked it. So but just heads up, like, any kind of opinion, I try to say it right after. When it comes to high time frame, like, your guess is as good as mine. I absolutely change my mind on a dime when things change. So if I was long the S&P, I would never be holding this into, you know, below this low, holding some kind of swing long, thinking that my idea has to be right and the market's wrong. If BTC finds support, I would want to long ETH, and I would probably want to look for longs in Atom and Solana. But I think the chances of that happening are lower now. Spot CVD work differently than Perp CVD. I mean, you have to consider the difference in order flow on spot and futures. Spot market doesn't have a sell to open. Futures do, right? Spot market also doesn't have a buy to close. Futures do. So the spot market CVD is always going to be a bit more skewed. This is looking ugly. Let's see. What else? Spend a little time walking through the process of long spot and short contract. So just to give you a quick example, like say I want to hedge my spot BTC. I have 1 Bitcoin. I deposit it onto Femex, and then I short that 1 Bitcoin's worth of contracts on futures. So I deposit spot. I'm long spot. I haven't sold my spot. I haven't experienced I haven't incurred a taxable event. I deposit it on the exchange, and then I sell an equal amount of contracts to reflect that 1 BTC. So you're basically 1x short. And it's what you can do is the easiest way to do this without thinking through, am I selling the right amount of contracts? Is this contract value different? The easiest thing to do is honestly to deposit Bitcoin, transfer it over to the coin margined contracts account. So at that point, you're depositing your spot BTC into the futures account. It's still Bitcoin. You haven't sold it yet. And then putting on 1x isolated leverage. So 1x. And then max shorting that value. Because if you press max, it's going to just allow you to sell what you have. And then you're basically selling against your positioning. So you're delta neutral. You know what? I will show how to do that on a pre-recorded video. I'll post one this week. How to hedge and to get flat. So there's a guy on Twitter says that if you have an overlap of value and therefore a composite profile, that the first move out of the composite never. Yeah, I mean, the idea is that you get multiple fake outs. There's no rule though. You can't say ever that there's a rule. There isn't. There's distributions, right? And this time I'm not talking about the actual distribution of TPO. There's distribution of outcomes. So more than likely, the first attempt outside of a balanced region is going to be a fake out. The more that this adds up, the more likely the next ultimate attempt is the break. And that's because the more attempts you have, the more stops you have built up, the more pressure that you have built into the structure. But to say that there's the first move out is never the real move, it's not necessarily true. What happens if there's some kind of catalyst, or if there's some kind of event and you've been balanced for that period, but then suddenly the market now is absorbing new information and trending. So you just can't, you have to remember that there's no hard and fast rules. If I'm going to trade BTC or ETH, I want to see that ETH is performing more strongly than BTC. So I want to see there's more upside capture. You could look at ETH BTC chart. Now there's some cases where you might see BTC or ETH has been performing much more poorly than BTC, but it's at a significant support level, and you might anticipate that this relationship is going to change, where Bitcoin is going to perform more weakly into the future based on market structure, based on where ETH BTC is located, within market structure. I want to be trading ETH if there's more upside capture to be gained in ETH. If there's, if it's still, it's always going to be higher beta. So it's almost always the case that it's going to be stronger than BTC. But my point was, you could immediately see the relationship if you're looking at an ETH BTC chart. I don't have a view on the recent pump and then dump. It's just following the S&P. So I don't have like a view on it or an opinion on it. If you just look at the S&P and then put on BTC, it's just acting like beta to the S&P. So market's going to market. Any other questions, guys? I need to drink some tea and honey or something. Yeah, SPX lows taken. Yeah, I mean, as I said in the last stream, I would just be careful still around this level. You could see a spike multiple times. Any kind of commitment through it is not something I would hold. But my point is, I don't know if I would want to sell this, meaning sell to open, until we're, it's risky. This is a good area for people to get caught off sides. This is an area that I really want to observe, though. Like, this will determine Bitcoin's future. If this finds support or if it loses this level, wherever the S&P is at a week from now is where the, Bitcoin's going to be. Honey and lemon. Yeah, thanks, man. That's usually what I do. All right, guys, I'm going to wrap it up. I will go live again. I will try to go live over the weekend. Hopefully feeling a little bit better. And I will put I'll put some pre-recorded content out over the weekend as well. And one of those videos I'll put out is how to hedge using futures, just to get flat, essentially just to get flat. All right, guys, until next time, thanks for stopping by. And I posted something yesterday to the effect of, well, let's just read it. The best exercises for absolute Herculean manliness. My workout routine is built around squats, rack pulls, and overhead press. Everything else is an accessory lift. And what I have to say about getting Herculean, one, you have to eat a lot. But more importantly, and this is for everything, and this is why I wanted to touch on this point, because I thought it'd be a good point to make. No shit, right? Is that most people don't even get close to their max. So most people don't even push 60%. So I think that's a good thing to understand in everything. You probably never really worked yourself out that hard. Most people quit. Most people take, rest when they actually don't need it. So I think the same thing applies, though, in other endeavors. Most people don't know what their max is. Yeah, I do a lot of 5x5s. I switch it up between like hypertrophy work and then core strength work. But most of my workout is built around a 5x5. I do a lot of accessory lifts, but most of my foundation was built off of, originally was deadlifts, squat, bench press, rack pulls, and overhead press. Now it's less. I don't do deadlifts as much. I don't think there's a good argument to be made for doing heavy deadlifts. Rack pulls are awesome though. Because you're not starting from the floor, you're starting from a different range of motion. But oh yeah, Braves versus the Mets. Man, those Mets. Was that walk-off win last night? I was raised a Met fan my whole life. My dad's been a Met fan. I inherited a Met fan. So, I know what it's like to lose. But it would be quite incredible for them to go all the way. Goggin level of max. Yeah, Goggin talks about that too. Your back hurts if I skip. Yeah, but deadlifts, like people still, I think the idea of like still doing deadlift for max, like just throwing 5 plates on each side kind of thing as you get older is, and that might not be the case for anybody. Might be 3 plates, might be 2 plates, but I think as you get older, that's the risk reward of that drastically changes. Whereas lighter weight deadlifts make a little bit more sense. And more than that, I think like if you have a trap bar, that's even better. Where the weight is placed a little bit more, your posture is more advantageous in that setup when you're standing in the bar rather than over the bar. So trap bar. All right, guys, that's it. I'm going to wrap it up. Thanks for joining, and I'll put out some content